Hello everyone, this is Juan Sarmiento and today is Tuesday, March the 14th. You would see that I have added already my one share. As usual, I had to add some money, a $500 account, as I have been doing every week, because I wasn't here last week. I was traveling and it was kind of difficult to do what I needed to do. I was on a plane, okay? So forgive me for that, but here I have already added my share. You can see I paid today, just a few minutes ago. I have the recording went bad, and so I'm repeating the recording. But you can see that I added one share at $393.06, which is a little over what the market is right now. And you can see that the market has been going down, and I have adjusted my chart here. What I have done, let me just, how about if you would see that the market has been trending down, and suddenly it has broken below the Ichimoku cloud, which is a very bearish move that the market has made. But it bounced pretty strongly today and yesterday. At the end of the market was at the end of the day, the market was rallying rather strongly, but then today, wow, big move. All right. So what does that mean to us? Well, it means that the uptrend that I had up until now has been broken. Okay, we need to make a new trend, and not that it would be respected. You just use it as a measurement of where the market is going. So we use our channel and we make a new trend, and when it does broken, well, then it's just points that tells you whether the market is good or bad at the particular time. But of course that could change. So I'm gonna click here and there, and that's my bottom of my channel. Then I go over here at the top of the channel here, and that's my uptrend. Okay, obviously it's below the Ichimoku cloud, so I'm going to take that with a big grain of salt. It's more likely that we are in a downtrend, and right now it's going to test the Ichimoku cloud. It would have to cross the Ichimoku cloud rather strongly, and then some of these red lines that I have drawn that are previous highs. You can see them here and there. Here is the previous high. Here is another previous high. Here's another previous high. These are interesting points that if the market quickly goes through them, well, then the next one up will be tested. Okay, and then you could see, have an idea where the markets are going. All of that, of course, is technical analysis. There are road marks along the way. It doesn't really mean much. With all the indicators, you have an idea. Okay, it looks strongly right here. It looks strong. The oscillators are returning, going back up. Oh, okay. So there is a good possibility that it will break above the Ichimoku cloud, and if it does, that's great. The oscillators are pointing up right now. Okay, so perhaps we have made a bottom here. Even though it made a new bottom here, it made a double bottom here on this oscillator, and so in the stochastic. So those are good signals that the market will go up again to test the previous channel lines, or the previous trend. I mean, these significant high lines that I have put here as indicators. These are ways to guide you through the market. It's very difficult. It's a very very difficult discipline to learn this, but I'm just letting you know a few things and tricks that I use, and you can make up your own mind whether you want to be a trader or simply an investor. And we are, in this particular video, we're just being investors. We are putting a little bit at a time, and we are using the dollar cost averaging. Whenever the market is down, we're buying, so that when it bounces back up, we make more money. Okay, and look, back here in October, when the market was at the low, I was buying, and now the market, my losses have been somewhat limited because my plan is invest for the long term. And you see that if the market goes even lower, we will keep buying because we are thinking of as an investment and not as a trading quick money kind of scenario. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.